Hey everyone. It is Kiera Ford, your real estate cheerleader, coming to you live. And what you really need to know about what happened last week for last week's rate cuts. Yes, the Federal Reserve's lowered the benchmark when it came to rates, but before you get too excited, let's talk about what that actually means for the DFW area. And if you're ready to take advantage, let's schedule a strategy session to make real plans. So let's just jump into things, guys. Oh my gosh, before we jump into things, I do have to say, I love the fact that we gained an hour to sleep. Yay. But it getting like dark, like feel like it's 12 o'clock at 6 p.m. is a little challenging. I mean, I'm a early riser, so I love the fact that I can wake up, me and Jake go walk, and as we're walking around 5 o'clock, when we're coming in about 6:30, the sun is coming up, which is beautiful. But I'm looking out my window right now. It is like pitch black. Like it's beautiful. Let me actually show you guys the sunset. That looks gorgeous. I don't know if you guys will be able to see it, but look at that. Can you see how gorgeous that looks? Like that's amazing. However, it is so dark outside and it almost makes you feel like you should be done for the day. And I still have things to do after this. So I have to remind myself, like, yeah, we could take a shower and get all those things done, but like, we still need to knock out a few more things. But, anyways, let's get back to what you actually jumped on the market of the moment live for. So, what just happened when it came to the Fed rate? The Fed rate dropped. So, the Fed cut the bench rate, and people are just like, okay, Kiera, like, does this mean that the mortgage rates will fall immediately? And they didn't. They actually ticked back up because the mortgage experts had already anticipated for there to be a cut. So they already lowered the rates so that we can kind of like hold whatever was going to be coming our way. But they actually ticked back up. But why? Why did they tick back up? That's what I feel like a lot of my clients have been asking me. Well, it's because mortgage rates are influenced by more than just the Fed moves, okay? Think inflation expectations, think of bond yields, and then also think of housing market data, okay? So when you see headlines that have like rate cut, it doesn't automatically mean that's gonna be a big discount on your mortgage payment, okay, guys? And so for the DFW market, this means we have to watch closely. We have to watch closely for opportunity, but just know that it's very fickle. It's very volatile. Things are changing daily. They're not huge changes, but there is slightly shifts. Okay, so I like to do my market moments of telling you like what I believe and then also speaking to my buyers, speaking to my sellers, and then my investors. So for my buyers, this is what I would say you need to know. Like if you are someone who is wanting to buy now, get pre-approved if you're serious. Stop waiting. Also have your non-negotiables together. Know your budget, know the loan type that you want, because not all loan types are ideal for every house, and then the area that you want to stay in. Also move quickly when you find the right home, because the homes that are priced right, they are still moving fast. I think sometimes when people hear buyer's market, they think that they can get the stars and the moons. And they can if the home is overpriced. But if it's not, you still have to send in a solid offer because you're still competing. Also, that kind of leads me to the next thing. If you're serious, don't wait, because when interest rates do drop down a little bit more, because right now they're hovering at about 6% plus, when they do hover lower than that, just know that you're going to have more competition. More people flood the market who are wanting to buy a property. And I will say, when they do come down, and interest rates do matter. I mean, like for instance, for an example, if you took a $400,000 loan, and let's just say 0.25% drop, it happens. What does that look like for your payment? You could save anywhere from like $50 to $100 a month. And honestly, that's a good amount of money. $50 can be gas, $50 to $100 can be groceries. $50 to $100 can be a flight somewhere if that's something that you decide that you want. So make sure that you are taking advantage of when interest rates do drop. Take advantage, lock in. before everyone floods the market. Okay. Now, for my sellers, think for my sellers, many homeowners are locking in lower rates earlier in the year. Okay. So it makes people reluctant to want to come up now and buy a house. Right now, a lot of people are wanting to go into debt for, gifts and things for the loved ones, not necessarily for a home, which to me behooves me because a home is one of the best investments that you can do for yourself. But you want to really make sure that you're running numbers, and you're actually seeing what is the best deal that you can present. So, for instance, I've had a client who wants to sell their property in Fate, and we were talking about, okay, so what will make it appealing? Because Fate is like really big with a lot of new construction, so we have a lot of competition. And when we discussed what the average concession is in Fate, they were like, wow, okay, it's 10,000. Do we want to just like give a $10,000 price cut? Do we want to give a $10,000 concession? Like, how can we get creative? And so some of my lender partners were talking, and we were like, okay, the best thing to do is we can advertise it as, if you decide to buy between now and the end of the year, your first payment isn't until March, because that concession can pay for December, January, February, March. And so their first payment would be in April. And so you just got to get creative, sellers, because there's still deals to be had. Don't sleep on the market right now, because the people who are out looking, they are serious buyers. Okay. Also, I want to highlight your home. You want to highlight your home strengths. So location, condition, price point. Remember, it is a beauty contest in a price war. So you want to make sure that when you're putting your property is on the market, it is priced and for the condition of the house. And I do this whole game with my sellers when I'm showing them different houses that we would be competing against. I'm like, how does this house look compared to yours? And a lot of times sellers are saying, oh, my house looks better than that house. Okay, in your opinion, or to a buyer? Because a buyer is wanting to get into a house where they don't have to put in so much work. Some of my buyers don't mind putting in a little bit of elbow grease, but most people want move-in ready. Is that how your house looks? If it doesn't, we have to price accordingly, or you need to be willing to discount it for it to sell at what you're willing to change or not change. Also, think about timing. If you're buying another home after selling, factor that into your new monthly payment or your rate that you will have. I know a couple of my clients have done bridge loans, or some of them have just decided to like prolong the buy and sell. Some people go ahead and buy before. It depends on what your situation is. But don't wait expecting like massive rate drops to drive huge demand, because listings, there's just more inventory, guys. It's just plain and simple. There's more inventory, and you have to price and position your property to win. Okay. So that's for my sellers. Now for my investors, you're looking at rental income and flips, and like a deeper like play. So for my investors, what I would tell you is it's kind of the same lines with sellers. Stay cautious. When people, what is my favorite quote that I say? When people are being cautious, you be greedy, and when people are being greedy, you be cautious. I think that that's the same thing that I would say for my investors right now. A lot of people are being cautious. So there's a lot of deals to be had. There's a lot of deals to be made. So investors, get out here, have an agent that knows your buy box. And if your buy box is open, I would say niche down to a buy box, so it's easy for that agent to find you gems. But if your buy box is so big, it can be a little challenging to navigate and narrow down what would be a good deal for you. So look for deals where you have margin, value add, repositioning, neighborhoods that are on the up and coming. I also did a video about Southwest, and they might not be creating thousands of jobs, but there are going to be jobs that are created. Also, follow Chick-fil-A. Chick-fil-A has done the research. Anywhere that Chick-fil-A is going, that is where growth is, which means that is where investors or people should be buying. Also, run your numbers. Assume rates won't drop dramatically. You want to be conservative. Also, consider holding. That's what I am. I am an investor that holds. I'm not an investor that flips. I like the slow and steady. I like to buy a property, rent it out for long-term rentals. I just got off the phone with someone who wants to do Airbnb. Airbnb is so much different than it once was. It's a lot stricter. Also, be mindful that some areas that do Airbnb, they are asking for hospitality taxes. So you're paying the same taxes that hotels pay. So once you do that, plus pay Airbnb, you're left with like maybe a 40% margin, which might not really even cover what you're wanting to cover. So just be very mindful of what type of investor you are. And then, of course, like let's map out your criteria. Your cap rate. What is that? What is something that, 5% is usually what people want when it comes to a cap rate. What is your preferred neighborhoods? What's your timeline? So investors, there's a lot more things that I feel like you need to narrow down to be a smart investor in this market, okay? So overall, what I would say is Dallas-Fort Worth is booming, guys. I mean, business growth, relocation, which means more demand remains. Inventory may be ticking upwards, but it's not dramatic, okay? So good homes will still go fast, so don't sit on the houses that you like. And if you're a smart buyer, investor, or seller, can you outpace those who are waiting for perfect timing? Yes, you can, because we never know when perfect timing will happen. The perfect timing might be today. Okay, so if you're thinking about, okay, Kira, what should I do now? Let's talk. Book a strategy session with me, and we'll look at your numbers, your goals, and your timeline. Whether you're buying, selling, or investing, we can craft a good play for you in the DFW current market. So drop me a DM, drop a comment below, depending on what platform you're on, and also schedule a strategy session, because I can't stress that enough. It's so funny. I love you guys, and I love that I get all these text messages and people are like, hey, let's chat, let's do this. The best way to talk to me is to get on my calendar, because if you text me like, hey girl, I would love to chat in like 20 minutes, that might not ideally work for me. It might not ideally work for you. So the best route to get on the calendar and to get something scheduled out for you, a tailor-made-ish plan, because usually in 15 minutes, I can't create you a tailored plan, but what I can do is get a better understanding of where you are and what you want, and then we'll create a follow-up plan to be able to get you going in the goal that you want for your timeline. So I trust that this has brought you value, guys. Once again, thank you for tuning in live with your favorite real estate cheerleader, aka your favorite Dallas realtor in the DFW area. I love you guys. And if there's anything that I didn't touch on that you would like more of, comment below. Hey Kira, next week, can you talk a little bit more about this? And we can do just that. All right, guys, let me make sure I don't have any questions in the chat. Nope, no questions in the chat. So I trust that I have answered any questions that you might have. And if you do have questions that I didn't answer, you know what to do. Comment below. Love you, love you, love you, and I mean it. Until next time.